Yields are ripping and the dollar's just holding on by its teeth in that. The question is this its last little hurrah before we break down, or are we going to sort of go a little bit back into this range and on with the show? So, look, as I said, I'll start off with the dollar here. It is 9:13. It's Tuesday, the 18th of August. And this was something that I pointed out yesterday. Actually, this whole sort of setup, which seems a little bit sort of all over the shop and that, but occasionally you do get these sort of odd sort of little bits of sort of technical setups and that. But I covered this last week because we're seeing a bit of this sort of fanned bottom here. Now, this isn't strictly a very common kind of sort of technical sort of analysis thing. Certainly the back test of falling resistances and that can be something, but the fact that it's coming around like this is, yeah, I think it's more just sort of just happens to be doing it. But I put a post up last night because we were coming down, touching this, and as you can see, as we've come through this bottom, I mean, everybody knows where we've come from: FOMC, BOJ, NFP, CPI. We've had every single bit of US data that could be against or non-favorable for the dollar to push has happened in the last couple of weeks, and it's really sort of changed the scope and the picture of, the market's outlook on basically what the Fed's going to be doing in September and potentially through to the end of the year with their rate decisions. And we've gone from, prior to the war, I mean, whatever, we don't need to go this far back of, 3 cuts through the end of the year, whatever, all that kind of stuff there. But let's just talk about the more recent sort of period, where it's sort of like everyone's like, yep, they're going to hike, going to hike, going to hike. Then Walsh comes out saying, hey, look, I'm not really going to do too much. And then you've had every single bit of data since then supporting that. Now, tinfoil hat, maybe it's just let's print these things to sort of support the outlook of it all, but or maybe Walsh is actually that good and maybe he's on point with it all, but that remains to be seen, and we'll have to sort of get to that when we get to that. But right now, here and now, with what we are seeing is this larger sort of range that is through the bottom down here, which we can see. Let's put it back on this little breakout box, because I think this is very important, and this is the thing that sort of, there's a lot of people that are, look, we've got this sort of large rising support from whenever it was, January or something, was it? Yeah, January lows. So yearly rising support. It's dancing around this. The more it sort of doesn't respect it, the more it sort of loses a bit of its sort of credibility as something that the market's actually trading off. But, it is there, so we will leave it there, because I think sort of like, should we move up over here, this is going to be a crucial point. I think this is really going to be your early idea about what's happening with the dollar. Of course, if you want the dollar to go higher, you need this breakout here. You need a break, you need a back test, higher high. Okay, we know the structure that sort of happens once it gets up over there. Where we are technically now is it's danced around this line. Look, it's respected it a few times, tested underneath. Now we're actually sort of committed, and, this is on a 4-hour, so we've had a number of closes down underneath that. So technically it is holding on that bottom side of it there. And just a quick little thing. I mean, look, this could be nothing with it all, but, what I have seen, this doesn't bode well for the dollar as well, mind you. If I can find where I've put it on this little checklist. Yeah, I know this is riveting stuff here as I sort of try to find it. This one here, USD CHN. Look at this on its day. I mean, look, admittedly, this is a much higher time frame move, but look what happened when this thing danced around it. Now, this was I think pretty much a weekly I had it on, was it? This was a weekly rising support. The point with this is just that sometimes these things, when they do want to break, they dance around it before committing, and then they break. And I mean, admittedly, this has been a complete one-way trade. And this is on a weekly as well. So we're going back to November 25 here, and it's just been absolutely dumped down. So anyway, the point that I'm getting to with this is the similarity with this is that, if this thing is going to break and it does this little dance around first before actually going through, it could be quite catastrophic for the dollar. Now, that's not necessarily my base case. That's just not, excuse me, that's not my base case, but that's just something to be aware of. the idea that even though it is sort of dancing around this, I mean, that was a weekly, this is on the 4 hour. Look, it's not going to be weeks and weeks in that, but it could still be, obviously, you could see the reaction once it did finally give up. It doesn't give up in 2 seconds and then sort of turn around. But anyway, the point is that sort of like, this is really sort of quite a crucial point for the dollar here. And what I'm saying is that if we see a move up and a rejection to this sort of effect, if we see a pushback here where we have a confluence of this falling resistance, we have the underside of that rising support from start of the year, and we reject and then come back down, that's the way for the dollar to break down. Should we see this, you can expect the dollar to get knocked quite hard. Like, it's not going to necessarily come here and then spring back to life. I think that would be its last hurrah kind of thing. Now, alternatively to this, because, we've got to consider both sides of the coin, of course, is that it actually sort of keeps on moving up over here. If we have something that sort of goes, okay, you know what? Maybe the dollar, maybe they do have to hike, maybe they are sort of doing that. And, little things that we could look for this sort of stuff is obviously the inflation side of stuff. I think that's really going to be the thing that sort of would save the dollar in this sense, because, as I said, excuse me, economic data the last 2 weeks and that have not been favourable for dollar strength. It's been weaker. NFP, it's been kind of flat. CPI is still above where it needs to be. It was weaker. PPI, it was weaker. Retail sales, all these things require a response of more of a dovish kind of take from the Fed. Retail sales are weak. You're not going to stimulate it by hiking rates or holding rates for higher. So that goes in the dovish camp. Jobs a little bit weaker. Just one print now, but, you don't sort of stimulate more jobs by having rates higher for longer. You do it, it's a bit more in the dovish camp. Inflation is the only one that could really sort of hold the dollar here. And the thing is, if you consider all these things, inflation is still 1.5 times its target. It has been for a long time, but it is still way above where it needs to be. So they can't really turn dovish based on that. Because if you turn dovish now and it's 1.5 times what the 1.5 times the target, well, it's only going to exacerbate the problem, and inflation is going to go higher, and that's going to not be good for anybody. So that kind of doesn't eliminate, but it's certainly a big stick in the road kind of thing for the people that sort of think that they're going to be sort of cutting. They're certainly not going to be cutting at this stage, but a hold is in this instance a bit more of a dovish move because the market's been pricing for a hike. So it's all about expectations against what they actually do. So a hold can be hawkish if the market was pricing for a cut, but in this instance they're not. They're pricing. Everybody's been talking and pricing for a hike, and so a hold would be the dovish sort of move with it all. Hence why the dollar's been weak and sort of coming back through here. So we'll have to sort of see how, all these new bits of data and all this come out. Something that could be sort of adding to this is the fact that oil is spiking. Oil is tipped up overnight. It's moving towards, as I said, I'm looking at 90 through here. We do have this sell zone to deal with soon. This is the Trump going to bomb you. No, Trump, we're not going to bomb you. Who can keep up with all these stupid headlines and that? We just on that as well. We did have some headlines out last night, and I think this is the thing. The market is very much ignoring these things a little bit, or maybe they just ignore different sources. But we had a bunch of reports out last night. Actually, here I'll call it up. Where are we here? I think this is very on point for it all. So, in one breath, we've got breaking the US and Iran reportedly agreed to extend their 60-day ceasefire, which expires today. So, beauty of hindsight now, we know that this obviously hasn't happened. We know that this is bullshit. But this is 3 minutes, 41 seconds, so 2 minutes later, senior Iranian officials to Reuters, Iran has decided to shift its policy from defensive to fully offensive one. Well, I thought they were doing a 60-day ceasefire. You know what I mean? And that got pumped up by a whole bunch of people. Obviously a bit of a gripe with me with these sort of things here and shit. But this is the thing: is these people here, They got 20. Well, they got 20 million followers, and they're printing garbage like this. And they were the source as well. These people, these Arab Yabia or whatever. That's these guys here. So you've just shot your credibility with all this sort of garbage. But if you look at how the market reacted just on this sort of little bit of data, we'll get on a low time frame so we can see it. This is just here. This is where it came out. This is a 5-minute chart. 10 minutes later, you're back up to where you were. Danced around a little bit, but obviously then broke up to the top side over here. So the market's starting to go, well, that's great, good on you, mate, don't believe you. So I think, as I said, I think people are doing, I mean, who really cares, but detrimental damage to their brand and that in that sort of sense, because, your sources and it's just garbage. Unless they sort of wanted to get one last little fill because they know it's going higher. Anyway, whatever. So the fact that oil's breaking out and pushing higher is a good argument to lead to the idea that it could push up on inflation as well. And if inflation goes up due to oil being higher, then the Fed may not sort of see it such an easy task, particularly if we do see that actually come out in the data. And this is what they always say, we're going to be data dependent. We've got to wait for the data to come out. Well, once that sort of comes out and you have some sort of confirmation that the inflation is actually moving in the other direction, i.e. higher, well, that's going to bring up the hold on, wait, they need to hike argument. And the thing is, the market's not going to wait for that print. If we see oil continue to spike, as I said, I'm looking at 90 plus in oil. If we get oil back up there, the market's not going to wait for it. They're going to start to go, hey, exactly what I'm saying now. Maybe they will need to hike, and you'll see a little bit of that sort of dovishy, hey, you know what, they can't hike sort of rhetoric filter back through to the dollar, and that's what will get the dollar moving back up. So, look, that's just a bit of my sort of take and outlook on it all at the moment. Certainly at the moment, if we just go on the technicals, got our range, got a back test of this sort of falling resistance. It's held again. So it needs to keep this pattern. If you push through here next time, I think this is going to be your area here. It's either going to be this or it's going to be this, but that's the area in which I think we're probably going to have a better picture about what's going to happen. Either we're back up the top side here, really pushing back up above this sort of falling resistance, and I think that'll be the last time that we're in this range and we'll break out the top side, or it's a last hurrah and then we sort of push back down here. But certainly at the moment, what we did get last night was a little bit of a fake out. So a little bit of a drop down here. We're actually oversold, tipping up on the 4 hour, pushing back up in here. So there's a good argument to sort of say that this probably will sort of continue up in here. If you have a look on the negative, the 1 hour, we had a negative divergence, which sort of gave us a nice pop. That has sort of like played out to the point of sort of like being overbought in that now as well. So important to sort of see this thing sort of continue back up over here. But I think there's an argument for the idea that we could still go up a little bit higher through here till we see it sort of make its decision up around sort of 99.80. Just quickly on this as well, have a look at the yields. Yields popped back did a similar sort of thing the other day. This on Friday, popped back here. This is chopped around this sort of air quotes falling resistance here, but certainly it does look like it wants to sort of push a little bit higher here. Bodes better for the dollar. The 10s really sort of making an effort to break out the top over here. We had some headlines as I showed before, and that market ignored it. It does look like it wants to push a little bit higher here. So as I said, if we break up above sort of like 4.75, yeah, I would expect to see some sort of carry on from the dollar there as well. Put this through here. So testing a little bit of this sort of resistance here. See what happens with the day, but yeah, as I said, this looks like probably. I wouldn't be surprised if we do so test at least out the top side over here as well. So again, bodes better for the dollar. One thing that's bucking the trend with it all and just keeps on rocketing on is gold, though. Gold is just ignoring everything and just chopped right back to thing. But again, we're so this is where I was looking at the weekend. I said, look, this is the sort of move for these two levels here. Potentially down and see what happens at this sort of buy, because this is a level resistance, support, tried to hold it for support, tried to hold for support, became the resistance. Now it's come back and it's the support again. So it is a crucial level that we've sort of seen. So, you know, any sort of downside needs to get through that. Obviously, a little bit away from that at the moment. And we did see that push down, push back up over here. More or less came back up to test this sell zone. Up that a little bit. Call it a touch there. Body fills from back here kind of thing. Let's clean this up a little bit. The danger for the gold is if it goes through the top side over 44.50. It does seem a little bit... if we put on... excuse me. What do we do? Put it on 8 hour here. These aren't as massive commit candles as we have seen. And obviously small bodies. Every time it sort of got a little bit higher, it sort of got sold down. Look at the high here. Sold down. Didn't quite get there. High here, sold down. High here, sold down. I don't know. I'm not convinced necessarily it's going through. I think if it does go through, we're going to see a big fat candle though. I don't think it's going to dribble through unless we do another sort of like take out the top. But I feel it's kind of done its job over here. We're back at 78% of that drop down there. So, you know, the market is still saying, hey, let's buy this thing up. That's where it needs to break if it is going to go downside, but that's obviously sort of not quite there at the moment. If the dollar and yields keep pushing, then there's potential for this thing to sort of obviously sort of be a little bit contained. Well, not that one. A little bit contained for the time being. There was a little bit of a channel through here. That's one thing that I kind of noticed. So make it blue so we can tell the difference. So this, from these highs over here, have a pretty good channel setting up. But the thing is with this, over here, let's get rid of that thing. It's pulled away from the continuation as of this point. So with these sort of channels, you want to go, obviously this is where it originated, but top side, bottom side. This one here needs to break through this line here. Because as it is at the moment, this is white. As it is at the moment, it's pulling into a sort of like a wedge. So you want to see with a channel, strong top bottom, top bottom, top bottom, top bottom. You want to see a touch of this line over here. That's your sort of let's put a few alerts on both of these actually. Cool. That's your that's where you sort of want to see this thing go. Take out the tops over here and sort of like really power through. Come up here, 44.65. That's kind of like, you know, continuation of the channel, and you can work with it constructively. When they start to pull away from where the channel is, i.e. this kind of move here, as you can see, it starts to form into somewhat of a little bit of a bit of a sort of rising wedge, which is reversal sort of stuff. So, you know, I mean, we'll see how we go because it keeps powering on where we are. We're just opening up and it's done its normal. So I've noticed there's a lot with gold recently. It does this on the opens, does its little sort of trick fake down, and then rips up. I mean, have a look at yesterday. Where was the open yesterday? What's this it here? Oh, it's on a 5 minute, isn't it? So where were we? Down here, yeah. So this is this open yesterday? 17th? Yeah, 17th yesterday. So we had a nice little support, comes down here, trap, bang, look at that. It's that little sort of, you know, up, dribble down, push up past those little highs there, and on its way and ripped up here. And then obviously dribble through the day. Now, it does look like it kind of wants to push a little bit higher here. I mean, let's get on to at least a halfway decent time frame. We'll see what happens in the rest of Asia. I'm off the screens, actually, in a few minutes. I've got to get going. But, you know, they have been buying it up very strong in Asia. Metals has really been sort of ripping with it all. We did also have that big sell down after that sort of stop hunt. You know, they ripped it up 50 bucks in, you know, 10 minutes or something. And then, boof, big sell down over there. So I think this is definitely going to be the crucial area. Get above this sort of what is, you know, this kind of sort of angled resistance here at the moment. Break above that, you probably go for new highs, I would say. So that kind of move up towards the top of what would be this kind of little channel, depending on the time you get there. Maybe you get it there. So you get to around sort of 65 or so. But again, considering both sides of the coin, that's where you need to beat if you're looking for any sort of downside. So it needs to come down underneath, basically, excuse me, 4,400. You need to get down underneath 4,400. Did have a little bit of a dribble down yesterday. So that that headline and that sort of came out, I can't remember, maybe around here or something, and the market just kind of, again, fluffed away from it. But once it kicked on, once it hit US sessions last night, it just, it shot straight up $50. Obviously pulled back, boom, 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 boom. So you need to take out those highs. So above 30, obviously you got this little thing. So above 35, looking for 65, below 4,400. Well, yeah, we'll see how we're going, but that's really where it needs to be, sort of 4,360, let's call that, just for a bit of a round number. But at the moment, it's sort of like, yes, it's pushing up early. It has, because, in Asia, they buy it up. They did the same over here, remember? In Asia, we buy it up, and then we turned around, we absolutely smacked it back down. So, I don't know, like, it's just yields pushing up so much, the dollar potentially looking like it could push up a little bit more. It makes me cautious for gold here as the buyers. I mean, the recovery has been such a big push through here as well. But this is what I was saying on the weekend. If this thing is to be a bit of a sort of even a sort of temporary medium-term top, it's not going to come back down easy. This is what you can expect. And if we do reject from up over here, and these levels do sort of get breached, well, you can start to see that's really just a big range over here. So yeah, you could potentially target back down over here. But as long as it's still up above here, it's still really just consolidating at the top end of a very big move. And as we know, consolidation favors continuation. So intraday, you could, if this thing does a breakout here today, then yeah, you could look for some moves back down to these levels over here. That's a plausible sort of move with it all. But, you got to sort of think, as I said, it is still consolidating at the highs of a big move. So is that really just biding time before we see another leg higher? All right, flip along quickly, have a look at silver. Silver really sort of bounced right back up here, really tested that back up of those highs over there. Obviously sort of pulled back down into sort of second half of US sessions overnight. Don't really have a lot to sort of say with this. I think pretty much what you do with this one is it's going to take a similar path to gold. That's the kind of play here. We have kind of had a bit of a touch up over here. So if this thing fails underneath 65, looking down to 64.20s, but realistically, again, it's just a bigger move over here. I did think at one stage this may have been some sort of like head and shoulder kind of setup. As you can see, it was at one stage rejecting through here. So we had sort of like, shoulder, head, shoulder, neckline, measured target, bang, did not happen. Heads and shoulders, I think people like them because they're like, oh, I see heads and shoulders. Very rarely do they ever seem to actually work, in my opinion. But that's why you wait for confirmations, I suppose. But yeah, so similar thing. Look, it does look like it kind of wants to drift up here a little bit. It got very high up over here with the RSI not really sort of reflecting, and it's already kind of rolling over here a little bit. So yeah, we'll see how we go with Asia. If they try to sort of, they are sort of kind of faking it up early. If they turn around and sort of flip it back down the other side, I think it could see a decent little sort of drop off with it if we do get something to that effect. And finally, just have a quick look at, actually, we'll flick through a few things. As I said, we've got oil. Oil's breaking out. It's coming up into this resistance zone. Okay, it stops here. We could expect it to stop here. Above 65.50, we're looking up at sort of probably around 90, body fill up over here, 90.50. So I think that'll be pretty decent. You got to also respect the idea that we're back through this kind of falling resistance through here, should it go through here. So it's not going to be easy, I think, up to 90, but certainly that sort of you could see it just building, and then pop through here last night. As to sort of how much they do it, occasionally with these things, this is the time where they're trying to sort of print headlines, trying to bullshit, all the kind of things, knock it back whichever way they can. Didn't do it, bang, moves forward. Are they going to sort of play more games here? Or is the market just going to go, hey, we fell for it every single time here, we're not going to fall for it here, and they just run it through here? So I think certainly above this line over here, which I'll put an alert on, which is this is the Trump greatest bomb ever bombed held off line. so stupid, but anyway, whatever. The point is, if we look at this as just a sort of structural move through here, 38% made a new high. Well, we know 38% is a strong continuation retracement. This bodes for it to sort of really probably sort of push through, I would say. I'm holding oil longs and that at the moment, and I'm looking at 90. So we'll see how that goes. Gold oil ratio has broken to the downside here. This is why I'm also a little bit sort of iffy about gold necessarily through here. I was looking for this kind of sort of flag move at some stage, didn't get it, so let's get it off the screen. I've changed that sort of target now because it did consolidate. It's obviously some love in there for it. It is testing these sort of previous lows down over here, which is also the 38%. So look, realistically, if you break the 38, 50s aren't really a normal one. So you could technically kind of be looking down at, say, the 61 down over here. However, what I have sort of put as this little immediate price target here, which I think is sort of something you can use on a shorter time frame, sort of intraday as well, should we get a breakdown further here, is the sort of range extension. So, call this a breakout box. It's range. We've got a break to the bottom side here. If we take out those lows, well, technically probably these ones over here, that's where you get a bit of a move down to 51. If this happens, we're going to see oil pushing up. Well, we just looked at oil and we reckon that is going to push up. Gold could be questionable. So if we do see this move down here, we're going to see gold continue that range. We're going to see oil push higher, and we're going to be looking for this price target down at 51. Gold silver ratio did similar to the dollar, in a little bit of a fake out to the bottom side, push back up in here. I'm not really super happy with how this has reacted out of here. When you break falling resistances, you need to see explosive moves. You get your breakout, your back test. This high here, this push here, needed to go above this breakout high. Didn't get it, and it just dribbled. And dribbled is not what you want when you see a break of a sort of an angled resistance, support, whatever it is. You want to see explosive moves. We didn't get that. It's dribbled off to the side, and as you can see, just break it down to the bottom side over here. So look, it is still, it's holding, but it's nothing special. Still needs to get above that same level. It still needs to get above, which is over here, which is above sort of, call it 68. If you get above 68, you'll see the metals come off a little bit, but certainly at the moment it's not really producing, but it is holding. So I guess that's a thing. Break below here, you're going to see a move probably back down towards 65. Back towards 65, you're going to see a breakout on gold. Put it like that. But I don't think that's how it's going to play out at the moment. I think we've got some short-term, medium-term downside in gold, at least to complete that range. And I think oil's going to break higher. So of the two, I'm sort of paying more attention to this because this is, I suppose, because this is favourable for what I'm trading. But no, because this is actually sort of showing some actual close outside the area in which I was watching. If you look at gold-silver ratio, got under here. This is obviously the area I'm watching, but it springboarded back up inside there. So we'll see how that one plays out. All right, that's it from me.